a concise approach to top-down market strategies and the forces affecting investments. That's the spoken word on investing.
Our chief equity strategist and economist, John Blank, strongly believes the details of the U.S.-China trade deal will not be what rallies the stock market further sometime this spring or summer. And he joins me now with more on that. So, John, in fact, the stock market moved lower recently and then recovered a little bit in the wake of the news that the president may raise tariffs on China. Do you expect this development to have a lasting effect on any rally?
Well, here's the thing people need to understand, Terry. The tariffing of the U.S. imports, no matter where they're happening, steel and aluminum is another thing, washers and dryers, solar, now all kinds of goods coming in for China, industrial and consumer-wise. All this does is tax consumers in the United States and slow our consumption growth rate down, which will slow our economy down. So in actually, it's not going to be a recession, but it is going to slow down growth for companies that are dependent on these global supply chains, which basically 45 to 50% of most companies are. So what's going to happen here is we're probably going to move into a period where the market's going to sort out the winners and losers, but the real issue is the tariffs, not the details of any trade deal. Any detailed trade deal will have to be worked out over multiple years. What will work out right now is whether or not the tariffs go. So I think people need to worry about what happens with the tariffs. I know that the Chinese understand this, and that's what they're pushing for, is to get rid of tariffs in this deal, and the president and his team are unwilling to do that. That's pretty much the issue right now.
What do you think will cause the market to rally from here?
Well, this week and the next week, we got to get the trade deal, on firmer footing, and then further down, I think it's just this digestion the market has to take with the higher PE ratios it's taken, and has to get more comfortable with that. That might take some time, but I also think there's some technical issues with the market moving above its previous high. We may stall out here for a couple of months before we move higher.
So, what role does the latest economic indicators play in underpinning the next leg up?
Right. Leading economic indicators in the United States have been drifting down for a couple of years now. They're positive, and they're drifting down. Now, if you look at it on a chart, there's a 1% level, and it goes to zero, and we've been basically drifting below to this 1% level. Now, the reason the 1% level on a chart matters is when you break it conclusively, the previous two recessions, then you do get a foretell of a recession. But you can dance around this 1% level for a couple of years. So that's what we're doing right now. If it goes through 0.5%, if you get a huge number down on leading economic indicators in the news, start to worry.
The S&P 500 and the NASDAQ hit all-time highs recently. How much higher do you see us going from here?
I've got us at 3,100 on the S&P 500 by the end of the year, Terry. So 2,900 now, we get 200 points.
Oh, and do you view stocks right now as being cheap given the interest rate level?
No, they're probably properly valued at 16.5 times earnings, which is effectively what they are. A little 16.8. They're a little rich, but I think as we move forward, we're going to move forward into a year of looking into 2020 on double-digit low, 8 to 10% earnings growth, which will probably give the stocks the support they need.
Stocks in healthcare, industrials, and communication services are on your radar right now. Let's start with Anthem in that healthcare group.
Right, Anthem, along with all the other HMO stocks, got shot down. But here I want to point out, in the midst of this shooting down by the Bernie Sanders scare, it's a number 2 ranked stock. The industry is a top 4%. The sector is a top 13%. And the style score for value is A. The growth score is B. In other words, this stock has nothing but singing songs to you in positive ways. So this is a good time to buy this stock.
Then there's Aero Environment.
Aero Environment's an interesting company. This is the company that designs, develops, produces, and operates for government agencies and business around unmanned aircraft systems. That's basically drones. So if you're looking for a drone company, Aero Environment is something you should look at.
All right. I don't want to drone on here, John, but finally, Knowles Corporation.
Knowles Corporation, ticker is KN. This is a company that's actually based in Itasca, Illinois, but I just drove down from San Francisco on the weekend, and I noticed Knowles was in Silicon Valley, right on the main freeway, the 101 going through Silicon Valley. So this is a bona fide Silicon Valley company with Illinois operations, and it designs and manufactures acoustic products, microphones, speakers, and receivers for handset, tablet, and consumer electronics markets. So you can see why they're out in Silicon Valley. Great name to know about. classic example of where Silicon Valley is where you're not thinking it is. It's in Itasca, Illinois.
Another interesting, informative conversation with Chief Equity Strategist and Economist John Blank. As always, with John, I'm Terry Ruffalo.